The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. It's Jeff Scott, and thanks for joining my webinar tonight. I'm going to get everything set here, and let's go ahead and get started. I apologize in advance if the audio is bad. I travel a lot, and when I'm in hotels that are going to charge me to do a phone call for an hour and a half, it's not worth it. So I just use my built-in speaker and microphone. So people told me before they can live with it, so I'm sure you can live with it as well. Hope you all had a great week last week. We'll look at the performance of the market as part of today's. We're getting near that time where if that correction is going to come, it's probably coming soon. So I entitled today whether it's a correction or a pause to refresh, and it's looking for a pullback. And we'll look at the market and see why, not just at the futures. Disclaimer, educational purposes only. Any recommendations in the spirit of education and not investment advice. I'm a doctor, not a broker. Just ask your physician. We all lose money with our investments. And I'm not affiliated with any software vendor or trading company. Anything I demonstrate, I paid for, and I use in my daily trading. I purposely hide my desktop so you don't get distracted by the inordinate amount of programs that I purchased. The reality is most of them I purchase, I use them like a bag for a short period of time, then forget I have them and they pile up in my closet. For the most part, I need a real-time trading platform, whether TradeStation or Thinkorswim. I need a tool to analyze, and I think High-Growth Stock Investor is the best analysis tool in the market. EdgeRater allows me to do some back testing, some market analysis. ETF Bandit sort of institutionalizes a lot of Larry Connor's ETF strategies in a very user-friendly manner. I use a number of different tools for seasonal analysis, increasingly becoming built into a lot of mainstream tools. But my favorite is Magenta Trader. And then I'll talk a lot about Ian Woodward and Ron Brown with Woodward and Brown Investing. And they have a newsletter and daily market updates there at a fee. And I'll show you where you can hit the weekend review and blog at no cost. I'm not going to spend much time on this. I do it every other week, so you've all seen it before. But I have a lot of folks that have taught me either through live meetings, through reading their books, or combinations, and some of them are listed here. And I think the important thing to do is to develop your own trading style and be your own guru. Don't look for so-called gurus to teach you. And I think one of the things I liked most about Ian when I met him is he basically said from the podium, I'm not a guru, but I'll teach you to be your own guru. Some of their websites are listed there. You can certainly pause the video to see them. I sometimes make the mistake of saying buy list. I'm not necessarily going to buy or sell anything that I bring up and look at tonight. I don't know what the market will look like in an hour and a half, let alone in 8 hours when the market opens. All I can tell you is based upon a pattern that I see tonight, I might identify a list of stocks either to go short or long with that I might be playing with in the morning if the market and the sector are moving in the right direction. So I look for a list of stocks that fit my personal likes. I watch them when the market opens. If the market and sector then move the way that I want the stock to move, I may make a trade. I also use a number of scans during the day looking for stocks that may be in addition to what's on my short list. And I automate a lot with some of the programs that are mentioned near the bottom. So as usual, I'm going to look at the market first. Then I'll use HGSI for top-down investing. And then I want to cut this off at no more than an hour, probably a little bit less tonight. Probably won't go much beyond the left-hand side, but we'll certainly identify some stocks. And I'm going to talk about Wolfpack, something that we've learned from Ian and Ron over the years. Speaking of Ian and Ron, if you haven't heard them live, there's not many chances left, not just because this guy on the left is getting kind of old. He's really getting younger. I think mostly there's an ebb and flow in the number of attendees for any program. And I think that Ian's, very likely this could be one of the last ones that he does live. For those that are interested, it's March 23rd through 25th in Palos Verdes, California. I'm going to show you where to find this on the web. I believe it's $1,250. It's a bargain. You get 1 dinner, 3 breakfasts, 3 lunches, and 3 days of great interaction, didactic teaching, live trading, and some networking opportunities. Here's the URL for the website, and just very quickly, when I go to that website, just to point out a couple of different things. First thing is they give you a free trial with no credit card if you want to download the software. Up along the top are a number of sets. Under blog is Ian's free blog. Comes up weekly usually, more frequently when he thinks something's about to happen in the market. You have 2 types of reports. Ron Brown does a weekly report on most weeks where he really sort of a combination of what the market is doing and how to use the software. I do a more verbose report every weekend, and both of these, Ron's and mine, can be found embedded in the website. Under support, the Learning Center has a couple of important things. It has a number of PDFs to get started, as well as a number of startup videos. Down at the bottom, they have a number of videos by Ian and Ron, myself, and others, helping you learn how to use the program. And then under add-ons are a couple of things that you need to make sure you install: the filters and the user groups, and that way everything that you look at will be similar to mine. Since I'm already on the internet, the futures are probably already aware are trading down on Sunday night, down 580 at 10 o'clock Eastern time. And so one might expect a rough start to the market, although there's still 8 more hours before that happens. And over the last couple of weeks, Mondays have been pretty brutal, so it wouldn't shock me to see us have a tough Monday, as has been the pattern, but we seem to recover by the end of the week. Back to the PowerPoint for just a couple of seconds. You have to, if you're going to go in and trade tomorrow or at any time, you got to know where we are. And I've been thinking we're sitting over here, gone over sort of a cliff, per se. But every time I think so, we get another move back up. So I am looking for a correction. And perhaps over the next 20 minutes, as I look at the market itself, you'll get an idea as to the veracity and when I think that might happen. Why does that matter? You can't fight the trend. You've all heard that. You've got to know whether you're on the left side, on an uptrend, where you're at the top basing, or at the bottom basing, or if you're in a downtrend, and that really will drive whether you are long, short, or short at the tops, long at the bottoms, and then taking a breakout when it should come in either direction. So enough of the background, and let's jump into the programs. So one thing that I like to do is I like to start my review by looking at market performance, actually, over the last week. So the first thing I like to look at is to open up and look on my desktop for a file that I put together earlier called Special Studies. So these are some things that I generate in HGSI. One of the things I like to generate is called the Group Performance Analysis. And what I basically do is I create a number of watch groups throughout the week. And then over the weekend, I like to see which groups were leading. And I actually do this on a daily basis. It's quite easy in the software. And for this purposes of this analysis, I bought at the close on the 22nd of February, sold them on the close of Friday, so looked at a true 1 week's performance. And first thing I look at is what did the S&P 500 do? S&P 500 was, again, relatively flat. It was up 0.17%. I noticed that there was a higher number of groups in black or up versus red. What else do I notice? I noticed that the HGS 100 slightly underperformed the S&P 500, yet had a 57% positive. IBD 50 actually had a great week, was up over about 1%, a little bit over 1% above the S&P 500, and I performed about the S&P 500. Again, not a fair list, especially on my stocks, because it would imply that I didn't do any buying or trading. I have a mixed portfolio with some shorts and longs and a number of collars. So my performance, probably by design, will have a little bit less volatility some weeks than the high growth stocks, because I do have some negative positions on board. As I look at what was working, interesting, the first three groups would have been groups that I would have thought would have been bearish. A red candle high can be a reversal sign. Now, the interesting thing is it just meant those stocks went higher and that the red candle had seen their day. I'm a big fan of pullbacks. Pullback waiting for signals. We're up 3.37%. My breakout list, only a couple up 1.73. And as you can see, the rest of the list, my overall buy list, to see where that fell, because if my buy list is really doing poorly, then I know I'm totally off base. But the stocks that I identified over the weekend, and several of which I traded during the week, were up 1.22%. So that tells me market positive, but not positive a lot. High growth stocks, especially as demonstrated by the IBD 50, outperforming the market. That's actually a good time to be a high growth stock investor. You want to be buying when the market's going in your direction, and you also want to buy when your stocks are outperforming. Let's take a look at some charts and get an idea of what's working and what's not working in the market. I'm going to go down to one of those groups that you install. Now again, it's called Woodward & Brown User Groups, and I got those groups from the website by going into the forum and double-clicking on and installing the Woodward & Brown optional user groups. And I like the top-down view, which is purely technical, but it's a view over a couple of weeks, heavily weighted towards the recent days, but it is purely price and volume driven. I rank them here with the raw combo, and it shows me the strength of the market as it's been over the last several weeks are small caps. Now, one thing I did see on the futures, although who knows if it's anything meaningful, was that the Russell seemed to be doing better. You know, when I see the S&P down 5.5, and the NASDAQ only down 7, and the Russell's up a little bit, it suggests to me that the small stocks may be actually doing better overnight than the big guys. But it's overnight, it's early, and it's not that meaningful. The weakness in the market, not a shocker, has been oil, gold, and silver and commodities, and that means the dollar's had another good week, which I always talk about being a negative for many of our portfolios. If we look at one-day performance, gasoline continues to rock and roll. At least it had a good day on Friday, although for the week it was down -4%. As you can see, a lot of things didn't do much on Friday. As you could see, volatility and oil were down more than 1%, and gasoline was the only thing up more than 1%. Over the last 5 days, volatility has had a good week, up 8.4%. Bonds and the dollar up, and leading the bottom, as I said before, those commodities. All right. Now, I like to look at the market, and I like to look at 3, 4, maybe 5 of these different indices. I like to start with the NYSE. I picked the NYSE because it's big. It has, I think, about 4,500 stocks, and they're all different sizes. And it's a nice, for me, helps me understand what the current status of the market is. I'm going to do this once from they explain what's on my charts. So if you've been here before, you've heard this all before. We'll close off the earnings because there are none. These are momentum ribbons. The bongos and the force index are both momentum indicators. I like to buy pullbacks. Pullbacks would be the longer one is green and the shorter ones turn red. And that's usually is when I start to watch because it suggests there's a pullback in action. You have accumulation and distribution in the middle. This is the high jump, also known as Woody's ATM machine. When it gets up near the top, it tells you that you're as extended as you've been in a period that you've been watching, and it's time to take profits. because as you can see what happened here, you either go sideways or you pull back. In this, here is viable gap-ups, which you'll see a green bar when they occur. Then the definition of Morales and Katcher from their recent book, Trading in their co-pilot, in their pilot seat, or the co-pilot seat, on the cockpit of the market. I'm sorry. We have candlesticks, as you can tell. In pink are pocket pivots down, also from Morales and Katcher. If you see blue ones up there, those are pocket pivots up. I use 4 moving averages, probably 4 too many. I have a 200 simple, a 50 simple in blue, and a 17 simple in green, and then an 8-day exponential, which I learned from Steve Bigelow. 8-day exponential is the T-line, and I like to buy things that are above that T-line, and that becomes a great signal for both shorting, or excuse me, for selling as well. Down here, I'm going to hide this one. On the top volume bar, and they're both volume bars. The reason why I have 2 is sometimes you can't see them with the different colors I have. The top one is Eureka's in green and Phoenix's in maroon and red. These are indicators only based on the NYSE, and they're sort of our follow-through days. So I put them there to give me a sense of market strength. And you can see over the last couple of weeks we've had a couple of negative Phoenixes, which is part of the weakening of the market. Again, this is the NYSE, so no surprise you see those weak days there. On the bottom are kahunas. Blues are good, reds are bad, and these represent percentage movement within the Bollinger Bands. The darker color is 0.4, the lighter color is 0.24, and these are stand-up and notice indicators, again, more momentum. So as I look at the NYSE, I see a market that had a very nice run-up. In fact, let's kill these lines and let's just review how good these run-ups are and where we're at right now. So in HGSI, if I put my candle here, this has to be a green candle low, I like those. And I run it up to the peak of the market before it rolled over. We had 15% in 62 periods. If we look at the correction that fell in, we've gone from that peak, and we pull back to here, which was 5 periods and 3.4%. It almost appears as we might be squeezing between the 17 and the 50, and we may be in a trading range until such time as we break out between the 17-day and that 50-day moving average. So those will be spots to watch as we try and determine which way the market's doing. Clearly, we're in correction mode, but as of yet, our correction is still only a couple of percent down and less than it was last week. If I want to look at small stocks or NASDAQ stocks, technology stocks, see a very similar pattern. I'm not going to go into too much detail. Pullback, especially on Monday, spent the rest of the week trying to get back to that 17-day. Not quite above it, right underneath it. Break above that 17-day for either the NYSE or the NASDAQ, and they say all clear and time to jump back on board. A break below the 50-day and staying below the 50 might suggest we're going to drop down another 100 points beyond that, down to the 200-day, which will obviously be painful on our portfolios. You want to look at big stocks, take a look at the S&P 500. And not to be a broken record, similar pattern, except the S&P 500 has gotten above the 17-day moving average. So it may be interesting to see if this is the leader going forward and whether it holds or not. So I'll be watching for my point of reference is, can we hold that 17-day and can the others break above it? And then looking at small stocks, just take a look at the Russell 2000. And you can see the strength in the market, and this market has been led by the small stocks. And I'll give you an idea. If you compare what we saw with the NYSE, you saw with the Russell, you saw 22% in the same 62 days, so considerably more advances. And if we look at the drop we've seen since then, It maxed out about 4% in 5 days, and we've had a bounce since then, also above the 17. So I think the 17 and the 200 are good, and the 50 are going to be my range targets for right now. And a break above or below is going to help me understand what I need to do with my portfolio and where the market is going. Looking at the S&P 1500, just for completeness sake, as you can see the same picture, and this is a nice mixture of big, small, and little. It's got the 500, the 600, and the 400 in it. And you can see a pullback, got right above the 1700, and sort of a hanging man up there. Be interesting to see where this market goes. I think it's certainly at a crossroads and may continue up, but I'm concerned that we're going to pull back to that 50, which was my original target, which we didn't quite get to, and then see if that 50 holds or if we go back and revisit the 200-day. So if the market is questionable, then what other things might I look at? The dollar. The dollar has exceeded my expectations, which is not necessarily a good thing if you're long the stock market. And you can see the dollar, show my annotations, from its low at the end of January up into the high on Friday is up 5% in 19 days. Now, a strong dollar usually means a weak market. And although it did gap up substantially on Friday, it did pull back, not quite a shooting star, but be interesting to see which way the dollar breaks. If the dollar continues to go up, I'd expect continued commodity weakness and continued sluggishness in the overall stock markets. I look at oil and silver and gold, and then we'll move on. Oil has had a pretty sharp pullback over the last 11 periods, down 8.5% to its low. Closed up above its lows on Friday. That could be, we'll see where we go on Monday. Maybe we'll have an abandoned baby there. And a recovery in oil. Gold has been getting slammed. As you could see, it failed the recovery, came back down to retest the lows. As I look at gold, I suspect, is 150 my target? Maybe a little bit higher. We're bouncing off the lows from July of last year. We're probably closer to the bottom on this move, in my personal opinion. But I'm going to let the market tell me what it does, not what I think it should do. It's hard for me to believe the dollar is so strong and gold so weak with the Fed continuing to print dollars. Silver will look a lot like gold. Perhaps getting ready to retest down here as well. And then lastly, if we look at the volatility index, this one did, we talked about would it trade up to the 200 and would the 200-day moving average be resistance, and it got above it for one day, came back down, tried to get back above it on Friday, failed. Until the VIX figures out how to break above that 200-day moving average, it's probably going to maintain in a low volatility state, which you all know is positive for the stock market. So if I take a breath here, my thoughts on the market, really, I'll go back and let's stick that S&P 1500 up because it's a nice view of the entire market. I see a market that is hopefully going to break out above that 17-day. My concern is that we may remain range-bound in this area between the 17 and the 50 if we can't get above the 17. And my concern would be, do we break through that 50 and go down to 200? I could live with that 50-day. So could most of your long portfolios, I suspect. That would be from top to bottom in the neighborhood of a 3 to 5% correction. But if we pull all the way down to where that 200-day moving average is, we're looking at an 8%, so an intermediate correction. And then below that, we could get a considerable drop. Cross our fingers, but clearly the early picture in the markets is down. Now, another thing I will use, most of you are aware, is Edge Rater to get a sense of the market. And whoops, that's not what I want to hit. I'm sorry, my bad. Let me kill that. And I ran this earlier, and it really is about as 50-50 as you can get in a market that really doesn't stand out. 7% of stocks are above, 3 are below the Bollinger Bands. The majority of them are in there. A little bit of a tilt perhaps to the right, but as you can see here, really a nice spread, not quite a bell-shaped curve, of stocks within their Bollinger Bands, which would mute some of my concerns in some of the overbought or oversold patterns in the stock market. So once I've had a chance to look at the market, I like to go down, I like to look at the industries. So as you can see in HGSI, we have 146 different industries. But I don't really care what was moving 3 weeks ago, although I will tell you that refiners remain incredibly resilient and strong. I want to know what's working right now, so I'm going to go down to Force Up. And this are the list of the things that are working today. Now, we said one stock, one other slide I wanted to show you. Let me see if I can find it. So I look at a lot of stocks every weekend. So I look today at about 400 different charts. And although I'm a top-down investor, I do want to get a sense of what else is out there. And sometimes I'll find things that I won't find otherwise. Now, you know, the nice thing is I did this, and I'm not sure I saw anything different than I saw doing what we're doing today top-down. So the first thing is I saw 2 wolf packs. And wolf packs are when you start to see clusters of stocks in the same sector or industry or in the same business that are all moving in the same time. And there's really 2 major wolf packs leading the market right now. Housing, although some countercurrents perhaps over the last week, rising interest rates might be one countercurrent to be concerned about. But for the most part, the market has been extremely strong. And as I call it, wolf packs on parade, the housing recovery has been leading. Whether they're builders, mortgage processors, the raw materials, and finished goods. And you could take it even further, the companies that create the television stations that you watch inside your house. That is where most of the strength in the market is, and you'll see that as we go forward. And then because of the high gas prices, and perhaps some of the downtime, some of the Sandy effect, and some refinery problems, refiners are kicking, excuse my French, ass right now. So let's take a look at, from a top-down perspective, what's really working. So you notice here, I'm going to look at the top 10 and then pick a couple of others. Pharmaceutical index is up at the top. So this is a 2-day force. So these are things that are moving right now. And I've ranked them by the force index. Force index has price and volume, just for completeness sake, for people that haven't been here before. Force equals volume today times close today minus close yesterday. You plot that, you take a 2-day exponential and a 13-day exponential. We're looking at the 2-day exponential right here. So pharmaceutical index near the top. Now, because of weakness in the market, whoops, my bad, let me try that again. With weakness in the market, some of these stocks made it up on the top, I think, because of dividends. Now, I only look at stocks that are above, outperforming the index. So Mylan Labs had earnings last week and had a small acquisition. They're a generics manufacturer, and they've truly been from the lower left to an upper right. Pull back on Tuesday to the 50, which would have been an opportune time to start nibbling. Had a gap up on a good day on Wednesday, gapped up on Thursday and Friday. Everything has turned green. It makes money with good earnings per share, trades at a multiple of 11.6, and I would consider Mylan to look attractive. and viable. My only problem is, my high jump, when you get up to the top, and here we are going back a year, and we are at the highest point the high jump has been in a year. My concern is that it's going to pull back before it moves again. So I'll be putting this on a list, but I'm not sure it's actionable. I'm bothered by the high jump. One that I own is AbbVie, and the reason why I own it is not because of any fundamentals. It's because of, well, I guess it's all fundamentals. It was recently spun off of Abbott. Now, what's nice about AbbVie is it pays a 4% dividend, which is why I think it's up here. It had a very nice week as well. Not much to say about this because it's just a brand new stock, but it's in an uptrend, makes money, and pays a nice dividend. And J&J is sort of not the new stock, but it's one of these old standards, nice uptrend, pulling back to the 17-day, mostly green up top, much lower earnings per share growth. But this is a very defensive play, and with the market being questionable, folks are looking at the 3.2% dividend, and I guess this is a place you go to for security, comfort, etc. In addition to the pharma stocks, biotech was working this week. So people who've been on my calls know I'm a big fan of several of these, Celgene being probably my favorite. And Celgene, after giving a bit of a base, I'm going to turn off TradeStation. I don't think I'm going to have time to get to it. And I know that by turning it off, I'm going to help my internet speed, although I've got great speed where I'm at. All right. Okay, excellent. So Celgene had based for about 5 weeks, and then had some, certainly some volume came into the stock and some enthusiasm over the last 3 days. I think the stock is worth more. It's got good earnings per share growth. Management keeps coming out and reaffirming earnings for the next 3 years with a doubling of earnings and sales. Have a very robust pipeline, recent approvals. You can see everything is green here. May be expensive, and we may want to wait for a pullback. But Celgene is, clearly has been a leader and remains a leader. Carex don't know much about. I kind of like the pattern. Had a big run up to 10. Pull back here to 6.5. It looks like it's going to run again. Now, why am I excited by it? I'm excited because it had a big kahuna on Friday and tons of volume coming into the stock. I don't know if there's takeout discussions, if they have a drug that's nearing approval. I don't know them very well, but it's one I'm going to investigate because it looks to me like the stock wants to run again. And if it runs, I'm going to look for it to take out up to 10. That's a 25% return. Something's happening with this guy. Gilead, boring earnings per share growth, although it has a big one the next quarter. But my God, what a beautiful tight lower left, upper right. Had a pocket pivot on Friday, mostly green here. Certainly is a leader in biotech. They have some great hepatitis C and HIV drugs, and they're moving into the oncology field. I'm looking for these guys to do some acquisitions. But in many ways, they're like Celgene, one of the leaders in the field. One that used to be a leader, Amgen, had stubbed its toes. Looks like it's moving again. Everything's turned green. Amgen is one of those stocks that wins if the biosimilars have challenges coming to market. And one of their competitors, Affymax, had their red cell drug develop some problems and get pulled by the FDA, which I believe explains this move up here that we saw. You see, there's anything else on this list that stood out to me? Yeah, I'm going to look at pharmacyclics. Again, I don't like to buy below the index, but pharmacyclics is one that I'm very excited by, and it's pulled back a little bit. Might be one to watch. They got a special designation as a truly innovator by the FDA, which tells me their drug's going to get approved. Everything is green. They've got a licensing deal with J&J, but they own the drug in the U.S., at least from a marketing perspective. Here's one to watch. If you get a big pull out in the market, pull back this might be one you might want to put on your shopping list, especially if you can get it trashed down closer to the 200-day moving average. The banks always are at the top, depending on which group, because remember, Force has volume and price change, and the volumes here are obscene. Let's take a quick look at this Bank of America to get a sense if there's anything going on in the banks. Below the 50, I let them get above the 50 before I get excited. Red coming into my momentum indicators. They had a good day on Friday, but it's the volume that gets them there. Citigroup on the 50 looks a little bit stronger. If you want to play banks, let's see what JP Morgan looks like. The strongest of the bunch. Sort of a steady run up here, a little bit of a sideways move to let some steam off. There's the high jump got pretty high. If banks start to take off, this is probably the one I'd be playing, as it's certainly the leader of these three. Internet software, just take a look at Yahoo and Google. I mean, these popped last week with LinkedIn's having their earnings jump. So Yahoo has sort of got that luster of the new CEO still, maybe a turnaround play. Had good earnings per share growth. Pocket pivots on Thursday and Friday. Good volume coming to stock. Everything green. It's already had a pretty big move. Nice looking chart, probably getting extended, and you can see the ATM machine or the high jump is as high as it's been, so I'd probably be careful there. Google, another leader near or at all-time highs, not up at the top on the high jump. Sometimes I get nervous with this stock because clearly its earnings per share growth rate is slowing, but its multiple is no longer 100, it's down to 24. Certainly a leader. I don't know what to say much about these stocks. I worry about some of their valuations. LinkedIn continues to be a superstar, and if this market runs, my guess is that it will continue to run. I'm nervous when I look at the earnings. Well, there's perhaps some growth. There's clearly revenue growth. I use the product, as do most other folks that are in business. But a multiple of 631 times. The market rolls over and everything tanks. This one probably tanks hard. But if this market continues to act positive, this one will continue to lead until it doesn't anymore. And you all know about Groupon getting rid of its CEO, and had some interesting things about that in the market last week. Back. Oil gas refiners, here's my, I'd call this my group of a year. You can see some pretty good performances over the last 5 days. You can pick your poisons here, no pun intended. I'll look at a couple of them. I'm in several. We've talked about these for some time. Tesoro, pocket pivot on Friday, everything is green. The problem with these stocks is that earnings per share growth is up and down, up and down, up and down. They trade at multiples that are small, and many have a small dividend. So Tesoro has been a leader, and looks like it wants to run again. Everything is green. Valero has pulled back a little bit, so it's come off the high jump, as you can see. Pulled back, the high jump got extended. Similar earnings per share growth as the last. No reason why this one isn't going to run again as well. Multiple of 8.3, dividend 1.7. This is one of the two that I own, Western Refining. Everything is green, great earnings per share growth, but topsy-turvy as the others. And he bet that its PE is about 8. That's actually lower at 7.3, 1.3% dividend. Next one is Calumet, I believe. Actually, Howie Frontier, like this one as well. Breaking above out to a new high, great earnings per share growth. Trades at a multiple of 6.7, 1.4% dividend. So the market really doesn't give these stocks a great multiple, but if they make their earnings, and you look at HFC, for example, you're going to knock out $1.10 and $1.16, so that's $2.26, and you're going to put in $4.05. So that's $1.79. I'm just doing it on the fly, times a multiple of 8. So that's about a $13 increase, even without expanding the PE if these numbers come in. These guys are running because of their fuel, in this case earnings, not gas. Obviously, they're tied to prices of oil, economic slowdowns, but this is a wolf pack where they're all doing well. Calumet's another one that I own. I think I probably need to rotate out of this into something else as it's had a huge run. You can see it's at the top of its high jump. Love this stock. It trades at a multiple of 12, so it's a little bit higher, but pays a little bit more robust dividend of 6.5. So the aberration in this group, we'll go down and look at Northern Tier Energy LP. So I don't know the stock from Adam. It looks like it's probably an IPO of 6 months ago. It's a refiner. It looks like it wants to go up as well. Everything is green. Lots of earnings per share. Multiple is high. You need to sort that one out. Look at its dividend yield. So, you wonder how long you can keep that. Is this set up as a REIT, right? I don't know. Love that dividend yield, and it's probably worth researching. Gosh, if I was on a fixed income and I had any comfort that this thing wasn't going to blow up, how do you argue with a 17.2% dividend yield? All right. Nice place to put your money or have had your money. Airlines, packaged food and meat, construction materials, a couple of things that will go into my builder's number. So we got a couple of cement plays up at the top, and we'll look at these quickly. Cemex, sideways, pull back to the 50, running again. Not my favorite stock. It's a giant stock. These are billions, of $3.5 billion a quarter. Losing money, I guess it potentially a turnaround. I'd rather see one that makes money, trades at a multiple, no multiple because it's losing money, no dividend. One that I talked about last week, which had a nice rebound, was EXP. Liked it because it pulled back to the 50. Had a horrible Monday, but moved back up Tuesday, Wednesday, Thursday, and Friday. Got above its 17-day. Pretty phenomenal when you compare. It's very small compared to the last one, but great earnings per share growth. Trades at a multiple of 46. Pays a teeny dividend. Does a number of things in the home building industry. And then we'll look at Texas Industries, another cement play. As you can see, Pocket Pivot breaking out on Friday with a kahuna and big volume. Everything is green. I suspect they had earnings come out. They've been losing money, so you don't have a multiple, so the potential turnaround play. I like to buy stocks that are making money. I like EXP in this group. Staying within this ideal, it's home improvement retail. At some point, you got to wonder if Home Depot is going to stop being a star, but it hasn't stopped yet. And you can see a beautiful run up here. It's got earnings coming into the stock, really stepping up. Trades at a multiple 22.5, pays a 1.7 dividend. Some of these earnings are probably aberrations related to Sandy, because when you look out a few quarters, the earnings slow down, but certainly been a leader. Because Lowe's company, they usually run together, not quite as strong, pull back below the 17-day. Also has pretty phenomenal earnings per share growth coming in. And I know a lot of people would say in the lumber side, especially from a building perspective, and lumber liquidators like Lowe's had pulled back, got above its 17 days, got some nice earnings coming into the stock still. Trades at a multiple of 36. Home Depot, obviously the leader of this group. The other two dealing with a shallow pullback. Home builders have been hurt. So there's no question that the home builders have had a problem. And if you look at some of their charts, you can see that you may have some good opportunities to get them in at a discount, or they rolling over. So Lennar, great earnings per share growth, starting to slow down. Everything is red, clearly a pullback here from its highs. Try to work its way back up. I don't like buying things below the 50. 17 is crossed below, so I would skip this one. D.R. Horton had great earnings per share and pulled back to the 50. It bounced off the 50 on Friday. It gets above the 17-day. I might look for this one to pop. It trades at a multiple of 26, and its earnings per share are starting to fall back down to get close. But of the home builders, that one stood out to me. Pulte, give or take, right about the 50-day moving average, still has some great earnings per share growth. So both Pulte and D.H. Horton, if this market starts to run, KB Homes, almost no pullback whatsoever. This is a turnaround play where it's been losing money. If the market pops up, you might see some of these lead again. They had a tough week for a number of reasons. Back. Let me just see if there's anything else here that I want to pop up and look at. There's a couple of finance companies, excuse me, that are having some interesting plays off of some of the mortgage assets. Let me see if I can find them. If not, we'll come to them later on. There's Walters in here. Yeah, I'm not sure where they live, so I'm not going to go searching for them. We'll come up with them in a few minutes, I promise you. So basically, that's where the market is moving up. If we look at where the market is dropping, semiconductors, gold, steel, oil exploration. I can tell you as I look through my stocks today, very few fundamentally strong stocks made my list in any of these categories. Semiconductors, gold, steel, and oil and gas, which has been a change because up until recently, they had been strong. So what I like to do is I like to do different tricks now to start to add to the stocks that we've just identified. And for those who've been on my webinars before, I like to do a group inclusion filter, where I like to see which stocks make it onto a lot of positive groups, with the idea being that if a stock makes it to a list of strong stocks many times in different vehicles, that if you make it to the list frequently, then you might be a strong stock. And under smart groups, there are a number of these strategies, whether they're pocket pivots, whether they are best criteria, ERG 240, growth stocks. So I do my own little group inclusion filter, and I call it my GIF All-Stars. And I looked at the top 30 stocks that met my or so list. And these are some of the stocks right here. So let me see if there's anything here that I might want to add. I can see a couple of them already that might be interesting to point out to you for tomorrow. Something is, I don't get broadcasters, okay? Never have, probably never will. We've got Nexstar and Sinclair, but we've also got Lionsgate Entertainment, and I don't think it's on this list, but Lynn TV. So if you don't own anything in the entertainment business, remember I said you might want to buy the things that go on the TV in all those houses? Take a real quick look at these three. Here's Nexstar, lower left, upper right, shallow pullback to the 17th. Kahuna, big volume on Friday. Everything was green. Awesome earnings per share growth. Trades at a multiple of 19 and pays a 3% dividend yield. It might be an interesting place to hide some money in the volatility coming in the market. And one could see this is a relatively young stock that's had a nice move up on the weeklies. Also making the list here was Sinclair. Big move up on Friday with a Bible gap up. Everything green, tons of volume. Kahuna, those Web, right click, more info from Web. FinBiz, let's see if there was a earnings day. And it comes down here, and what does it say? Why the shares jumped, in play, retransmission, buying television stations. So you need to read about it yourself, but that's bullish stuff. And maybe it's time to jump in this. This one doesn't have the same kind of earnings growth going forward. And then Lionsgate, one I've been in and out of, I should have just stayed in it. And a nice run up here at the pocket pivot, everything's green. And like that Nexstar, great earnings per share growth. Multiples are low. This one 25. This one does not pay a dividend. So those are some things you might want to go look at. Anything else here that pops up? We looked at LinkedIn. So this was from my group inclusion filter, and there's 2 or 3 stocks that are companies that seem to make money on poorly performing mortgages, and they've been buying at deep discounts the servicing portfolios from the banks. OCN, or Owen Financial, gave a good opportunity to buy earlier in the week with a pullback to the 50. It came out with earnings that looked disappointing, except they're being judged by growth in their portfolio, and their portfolio grew nicely. And despite a negative earnings report compared to expectations, stock actually traded up off the 50. I think this continues to run. Look at the earnings per share coming into this stock. They don't have to grow their multiple if they make those earnings. They should have some very nice growth in the valuation. The other one is called Walters, W-A-C, and Walters looks a lot like OCN from what the company does. I would expect some volatility, but these have been good performers, great earnings per share growth, and I'm an earnings junkie. I like to buy stocks that have good earnings per share. Another thing I like to do is I like to go into all securities. I like to go into HGSI strategies, Woodward and Brown, reference library, look up miscellaneous, find the sprinters. Here's another list of strong stocks. Now you're going to notice something. There's a lot of stocks that are the same. Trex is another stock taken off of the home industry. This one is looking at the DEX. And you can see a nice run up here, makes good money. Everything's green, looks like it wants to run again. And you could see on the sprinters, you can see broadcasting, which we talked about. Talked about oil gas refiners, several of them making the list. It's just another way of using the program to find high value opportunities. I think on that note, I've had a chance to review what I wanted to review. Go back to my PowerPoint, make sure I'll hit everything. And I have. Next time I'll try and spend some more time on the right-hand side, but as you can tell, my voice is struggling, and so at this point I think I'm going to call it a good night. Thanks, everybody. Hope to see a lot of you at the Ian meeting that will be coming up shortly, or I should say the Ian and Ron meeting, to be fair. Hope you've enjoyed this broadcast. Hope you have a good week in the market. As we started, I think that we're due some pullback. Just update this to see if anything's changed out there. It looks like we've got, at least at this hour, some weakness in the S&Ps, and we'll see if that translates into the small stocks as the night goes on. You all have a great night. Thank you so much, and have a good week in the market. Jeff Scott signing off.